Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 5 o'clock in New York on Monday, the second day of June 2014, and this is the daily report for gold and silver. We currently are seeing lower pricing pretty much across the board in the precious metals markets, with gold off about $7 to $8 on the day. 1243.39 is a current screen print, just off of a low of 1240.30, high 1251.90. Silver also breaking lower today, current screen print 1873, the low is 58, the high is 98. It's currently off about 6 cents in terms of percentage drawdowns. Silver's actually showing the best performance, least amount of drawdown percentage-wise in terms of the precious metals markets. And we do, of course, have the equities markets up again, and that's causing some pressure on the precious metals markets. More on silver towards the end of the show. We're looking at a 60-minute chart. Chart, of course, is in standard candlestick format. And we have been talking about the fact that we had that compression triangle and we had really an utter breakdown in price. I want to start today's show by looking at it in a different way, and it's through the eyes of this 60-minute chart. The first thing is we defined the fact that we were trading in a very narrow range, and we had some defined support from this low and this low, roughly at, call it 1275 to 1280. Those were the lows that came in the market. We also had a fairly strong band of support, as you can see by these bottoms right in here, and that was at around 1285, 1287. When the market hit the apex of that triangle, and we'll bring that chart up next, we had the market move to some dramatic new lows, and we've seen it meander to lower pricing that you can really see in detail when we go ahead and pull up a 360-minute chart. Of course, these are still short-term studies. However, what is quite apparent is that any level of support that we did have is no longer present in the market. Now, the real critical area in my eyes was 1262. We broke through that with a vengeance. We've continued to the downside. And as we talked about, I released a special report yesterday in which it's my belief, my contention at this point, that if the market continues lower and breaks below this, call it 1232, which is a 76% retracement of the rally experience from the beginning of the year, let's say, to about $1,400, just shy of that. If we break that, that's a 76% retracement. My belief is that we'll probably go and test the record bottoms that we've had recently, meaning the double bottom at around 1181. So as we look at this market, and we're looking at a daily chart right now, and what I want to bring our attention to is the fact that we did have one real breakout in the market in which we finally saw the market break really above this long-standing resistance line, gave us some bullish optimism that was to be short-lived and to be false hope. Obviously, as we see this market backing off, when we look at it in this way, we can see that we have really very, very strong resistance. I believe this top is 1435 and this is 1391. So we have very, very strong resistance just at around 1400. The market came down with a vengeance. You can also see quite clearly this band of congestion that we had right in here as the market really tried to find some type of support. And of course, you recall we did have that real compression triangle, and as we went to the apex, we did break to lower pricing. Now, with the market trading at 1243, as I said, our next real point of contention, I believe we're going to continue to see lower pricing ahead. If we break through this 1232 area, that's the 76% retracement, but it's a very, very short-term retracement in that all we're looking at is this one rally right in here, breaking below that 76%. And as I said, really the real next level of support has got to be these two this double bottom, or these two lows just below 1200. My sense is that we have at least a 70 or 80% probability that we're going to find some support in this area, but we'll have to see if the market continues under pressure and actually reaches these points, or what would effectively be a triple bottom if in fact it hit and found support. So I draw your attention to this chart compressed. I've turned it into a 3-day chart because we've talked about the current area of support 32. We talked about the fact that there's a double bottom just below that. When we look at this 3-day chart, you can see what is really the critical area that we could be in, and that of course is this 61% retracement. The 61% retracement, we've drawn it a couple of ways, but when we're looking at it from, call it 677, just below 700, up to the record top, we get a 61% retracement, anywhere between 1154, 1140 in that area. So my sense is this: if in fact the market continues lower, this is the area we want to take a look at. And of course that area, as I said, is 1181. If it breaks through there, we could make a test for the 61% retracement. Now, I don't think that that's in the cards as of yet, but we would have to see how the market reacted if and when it got there. But if it broke through this particular long-standing 61% retracement of the dramatic price rise that we saw occurring end of 2008, 2009, 10, and peaking out at 11 and third quarter of 2011 as it hit this record high. If we broke through this 61% retracement level, that would be dramatic. And that's why my sense is that we should see it really hold this line in the sand if in fact it goes to test that double bottom and break through that. For the current time, my recommendation is that look for lower pricing. There's a couple of different strategies, whether it's just going short in the market or doing a couple of option plays. But I do think that we are going to see this market at least go and test 32, and if it breaks through 32, I think we've got a dynamic chance of seeing the market move below 1200 to 1181 and to test this double bottom right in here. So traders, interestingly enough, silver is showing the least amount of drawdown on the day of the precious metals. The fact that we have the equities markets, which has been moving higher recently, and the fact that we're looking at a highly industrial metal means that we might see some supportive action because of that. Now, when we look at this daily chart, one thing becomes quite apparent. We've got these series of bottoms. These bottoms come in at around, starting at about $18 per ounce to about $18.25 right in here. Now we're sitting at $18.74. The low is just around there. So this is a pretty critical band of support, because of the fact that if it breaches this area, and if we take a look by putting our line all the way across, you can see some supportive action here, but there's really nothing in terms of price structure, because this is that particular point in which the market went parabolic and took off. So we'll have to see how it reacts, but I have a feeling we might find support in silver roughly in the very, very low $18 per ounce area. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow on Tuesday for another daily update and review. Bye-bye.